Welcome back, traders. In this video, I'm going to break down a beautiful smart money concept setup on the 1-hour time frame. This chart is a perfect example of how liquidity, inducement, low time frame change of character, order blocks, and point of interests work together to create high probability trades. Watch closely, because I'll show you exactly why I entered two sell trades, one from the order block and another from the point of interest, straight down into sell-side liquidity. As the market begins moving, the first thing I notice is the formation of equal highs, a clear liquidity pool sitting above this structure. Retail traders see resistance here and expect a reversal, but smart money views this as fuel. The market pushes upward, grabbing the liquidity sitting above these highs. This liquidity sweep is the first sign that the market is preparing for a shift. Once liquidity is taken, big players have the orders they need to push the market in the opposite direction. Right after sweeping liquidity, notice how price fails to continue upward. Instead, we see a low time frame change of character, or change of character. This is one of the strongest early confirmations that the bullish move was only a liquidity grab. The market breaks the previous short-term low, showing that order flow is now shifting from bullish to bearish. This change of character is what tells me, okay, smart money is done accumulating here. We're preparing for a sell. Next, we look for the order block. This is the last bullish candle before the impulsive bearish displacement. On the chart, it's a very clean order block, sitting right in the premium zone. This OB acts as a high probability supply area. Why? Because smart money used this exact candle to engineer the liquidity sweep and then reverse price. When price returns to this order block, institutional selling is often reactivated. Before price taps into the order block, we see something interesting: inducement. Inducement happens when price creates a smaller high or liquidity just below the order block, tempting early sellers to enter too soon. Those early sellers keep their stops above the inducement high, and smart money will push price up just enough to take those stops before delivering the real move. This gives us a powerful confirmation. Price wants to go back into the order block, take inducement liquidity, and then drop. Once we've identified the setup, we must know where the price wants to move. On this chart, the clean external liquidity sits below a major swing low, marked as sell-side liquidity. This is where smart money aims to push the market. It gives us a clear take-profit idea and boosts confidence in the sell setup. Now, we have both. When price returns to the order block, we see a clear reaction. This is where I take the first sell entry. Stop loss goes just above the order block, above inducement. Price taps in, wicks slightly above the order block to collect remaining liquidity, and then rejects aggressively. Bearish displacement follows immediately. Perfect confirmation. Price begins its journey toward the sell-side liquidity below. While price is dropping, it forms a smaller pullback, creating a second point of interest. This point of interest matters because smart money often returns to mitigate these smaller imbalance zones before continuing the trend. This point of interest sits just below the main order block and acts as a refined entry level. Great for traders who missed the main order block entry. When price returns to the point of interest, we get a clean mitigation tap. This is where I execute the second sell entry. This entry is tighter and allows a smaller stop loss. From here, the market drops sharply with strong bearish momentum. The move continues directly toward our final target, sell-side liquidity. Once that liquidity is taken, the cycle completes. Smart money grabs liquidity above, drives price downward, and collects liquidity below. And that wraps up this complete 1-hour time frame SMC breakdown. We used liquidity, inducement, low time frame change of character, an order block, point of interest, and liquidity targets to execute two precise sell trades. If you want more breakdowns like this, make sure you subscribe and comment which time frame you want me to break down next.